Vanguard has some of the lowest cost, highest liquidity mutual funds around. Here we'll look at the best Vanguard mutual funds. Mutual funds provide instant broad diversification and are commonly the investment vehicle found in menus for employer-sponsored retirement plans such as a 401k. They trade at the true intrinsic value of the fund, known as the NAV or net asset value, allowing investors to avoid price fluctuation due to market forces during intraday trading. Note that most Vanguard index funds no longer offer investor shares to new investors, so all the mutual funds here are the Admiral Shares share class. First up is VFIAX, the Vanguard 500 Index Fund. VFIAX is Vanguard's mutual fund for the famous S&P 500 index, which is comprised of the 500 largest profitable companies in the United States and is considered a barometer of the US stock market, as it is roughly 82% of the total US stock market by weight. This is a market segment coveted by retirees for broad diversified exposure to US large cap stocks, which are less volatile than small and mid caps. VFIAX has an expense ratio of 0.04%. Next up is VTSAX or VTSAX, the Vanguard Total Stock Market Index Fund. VTSAX is one of the most popular mutual funds out there with over $1 trillion in assets. The fund provides broad access to the total US stock market via over 4,000 holdings across large caps, mid caps, and small caps. This more holistic US market exposure provides a greater degree of diversification than the S&P 500. Small and mid cap stocks have greater expected returns than large cap stocks, so many opt for this fund to get exposure to them. Specifically, these smaller stocks make up about 18% of the fund by weight. VTSAX seeks to track the crisp US total market index and has an expense ratio of 0.04%. Next up is VTIAX, the Vanguard Total International Stock Index Fund. Our previous two mutual funds only capture US stocks. I've explained elsewhere why it's likely wise to diversify globally in stocks. US investors can add stocks outside America in one fell swoop with VTIAX, which is the entire international stock market outside the US. VTIAX seeks to track the FTSE Global All Cap ex-US Index and has an expense ratio of 0.11%. Next up is VTWAX or VTWAX, the Vanguard Total World Stock Index Fund. VTWAX is a combination of the previous two funds. It is the total world stock market, allowing investors to be globally diversified with the use of one single fund. This simplicity can be valuable. In owning VTWAX, you can brag to your friends that you own over 9,000 stocks in your portfolio. This mutual fund seeks to track the FTSE Global All Cap Index and has an expense ratio of 0.10%. Next up is VBTLX, the Vanguard Total Bond Market Index Fund. On the fixed income side, VBTLX allows investors to capture the total US bond market, including both government bonds and corporate bonds. Alongside VTSAX and VTIAX, this fund rounds out the trifecta of the extremely popular Bogleheads 3 fund portfolio. VBTLX has an effective intermediate duration of about 7 years. The fund seeks to track the Bloomberg US Aggregate Float Adjusted Index and has an expense ratio of 0.05%. Vanguard also has a total bond market fund for international bonds outside the US, which is VTABX. The conclusion on geographical bond diversification seems to be that for US investors, buying international bonds is unlikely to hurt the portfolio, but is also unlikely to help it. The fund is USD hedged, so no need to worry about foreign currency fluctuations. VTABX seeks to track the Bloomberg Global Aggregate ex-USD Float Adjusted RIC Capped Index and has an expense ratio of 0.11%. Next up is VSIGX, the Vanguard Intermediate Term Treasury Index Fund. Total bond market funds include both Treasury bonds and corporate bonds. Treasury bonds specifically may be preferable for their lower correlation to stocks. Treasuries, also known as government bonds, are also the safest type of bonds, particularly when we're talking about US government bonds. I myself solely use US Treasury bonds in my own portfolio. VSIGX is a one-size-fits-most US Treasury bond of an intermediate duration. The fund seeks to track the Bloomberg US Treasury 3 to 10 year bond index and has an expense ratio of 0.07%. Next up is VICSX, the Vanguard Intermediate Term Corporate Bond Index Fund. Those specifically seeking income may look to corporate bonds with their relatively higher yields. VICSX, which holds intermediate corporate bonds from US firms, is a popular choice for such investors. This fund seeks to track the Bloomberg Barclays US 5 to 10 year corporate bond index and has an expense ratio of 0.07%. Next up is VTAPX, the Vanguard Short-Term Inflation Protected Securities Index Fund. Incorporating inflation-linked bonds may be a prudent move for retirees for whom sudden high inflation can derail a retirement plan. Those seeking short-term inflation-linked bonds called TIPS or Treasury Inflation-Protected Securities can use VTAPX. The fund seeks to track the Bloomberg Barclays US Treasury TIPS 0 to 5 year index and has an expense ratio of 0.06%. Do you own any of these Vanguard mutual funds? Let me know in the comments. Thanks for watching. I am long VFIAX in my own portfolio.